In a market where volatility has become the new normal, one question stands out for serious investors. Which stock is consistently resisting pressure and showing real strength? Today's focus is on SoFi, a company that continues to capture unusual attention across institutional activity, dark pool movement, and technical levels. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell. But before that, this is not a financial advice video. SoFi delivered another steady trading session, recording a gain of around 1.65%. Throughout the day, the stock moved between a low of 29.32 and a high of 30.42, with almost 59.7 million shares traded. Despite the active price action, the overall macro environment was relatively calm. A single Federal Reserve official made comments, but they did not influence broader market sentiment. Geopolitical commentary surfaced as well, though none of it was impactful enough to shift investor direction in U.S. equities. Toward the end of the session, a slight downward push occurred during power hour. This type of movement typically reflects cautious positioning ahead of major data releases. The upcoming ADP employment report, which covers a full month of labor metrics, often plays a role in shaping short-term expectations. When traders anticipate significant economic data, last-minute selling or defensive adjustments can appear, which is what the price movement suggested. However, what truly stood out happened after the closing bell. After-hours data revealed unusually large buying activity in dark pools. One block trade alone represented more than 1 million shares near the 29.7 level. Several other heavy prints came through as well, including trades around 4.78 million, 3.8 million, 2.6 million, and 1.8 million shares. This type of institutional-sized activity highlights the level of interest surrounding SoFi at the moment. During regular hours, secondary market prints showed mixed behavior. Some institutions were trimming positions, while others were accumulating. Notable blocks included 51.7 million, 15.1 million, 8.6 million, 4.4 million, and 4 million shares. This indicates elevated liquidity and active repositioning among institutional traders. One key upcoming event is SoFi's participation in a global tech and AI conference hosted by UBS. Historically, these fireside chats have coincided with positive sessions for the stock, largely because they provide clarity on business direction and future strategy. The featured speaker for this session will be Chris, representing SoFi's leadership team, and the event could attract additional market attention. Short interest activity remained controlled with around 54,000 shares returned. Intraday patterns showed minor increases and decreases, but overall, short behavior stayed quiet. Current short exposure accounts for roughly 10% of the free float, approximately 118.43 million shares. The total value of these short positions stands at nearly $3.44 billion, highlighting the elevated market interest surrounding the stock. Options volume was active as well. Call premiums totaled approximately $71 million, while puts came in at around $14 million. About 41% of all options activity leaned bullish. Some of the notable trades involved multi-leg structures combining 28.50 calls, $32 calls, and $26 puts. These contracts had expirations set for December 5th and December 12th. Activity of this nature is often associated with hedging, risk adjustment, or structured positioning rather than simple directional bets. Consensus trading expectations place near-term price targets in the 30 to 30.50 range, while more bearish positioning pointed toward levels below 29.50. Closing price landed at 29.51, situating the stock between the pivot level and the R1 resistance zone. The next technical resistance is around 29.40, while support sits closer to 28.37. When compared to other fintech names, SoFi continues to stand out. Stocks like Upstart closed in the red, yet SoFi maintained momentum. A major difference between SoFi and other fintech stocks is the consistent presence of institutional investors. In many peer stocks, algorithmic trading dominates volume while real long-term capital remains minimal. SoFi, however, exhibits persistent institutional participation, which helps stabilize its price structure. Technically, the chart shows a strong V-shaped recovery. The stock has successfully reclaimed the 50-day moving average, which currently sits around 28.7. This level has become an important line to monitor for trend stability. Maintaining strength above the 50-day moving average supports the continuation of the current upward structure. Stochastic RSI currently reads around 71, indicating short-term overbought conditions. This does not imply reversal, but it does suggest that consolidation phases can appear when the market encounters the first sign of weakness. That weakness does not need to originate from SoFi directly. Broader macro conditions can trigger it as well. Market depth data also shows increasing buy-side pressure. Since the local bottom formed on November 21st, buy orders have been building steadily, indicating confidence-driven accumulation. Even though media articles on SoFi were limited today, the upcoming conference could attract additional coverage and potentially increase investor attention. Combining the data from institutional flows, dark pool activity, options sentiment, technical signals, and market depth, one theme becomes very clear. SoFi remains one of the most actively monitored and most strongly traded fintech stocks in the current environment. The stock continues to demonstrate resilience, strong liquidity, and sustained institutional support in a market where many fintech peers are struggling to maintain momentum. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.